Good afternoon, everyone, and thank you for participating in this session. Our subject for today is the changing face of operational risk in the post-pandemic world. We all are going through the most difficult time for the last 8 or 9 months when the pandemic crisis has actually impacted globally, all of us. I hope you and your dear ones are healthy and doing well in the current tough environment. In the current crisis, when the whole world is getting impacted because of this pandemic crisis, most of the sectors have got impacted due to uncertainty, and there is all around there is an economic slowness which everybody is experiencing. However, the lending industry and the BFSI industry has really done well in terms of re-emerging and diligently working towards adopting to this new change or the day-to-day change in the environment and adopting the new normal. I think we will talk about this going forward in rest of our slides. My name is Pratyush Chandramadhur. I head the revenue for Authbridge. I come from a 20 years of experience in the lending industry. I spent good amount of time in data and information company also. In Authbridge, we are delivering products and solutions which supports digital onboarding, fraud and risk management. This is built on alternate data and technology solutions. Let's move on. Yeah, another point. You can keep on posting your queries in the Ask Your Questions section, which is coming on your screen. And whenever we will get a time and opportunity, we will respond back, or anyway, we will cover all those questions at the end of the session. Okay, so this is the flow of our presentation today. We'll talk about risk control structure. We will talk about the operational risk framework. How is the operations convergence happening? What are the impact? What are the new scenarios? How the things are evolving over a period of time, and how the things we see in the next 4 to 6 months when the things are changing every day and every month. Redefining the operational risk management framework. What are the components of the new framework? And then adoption of the relevant tools which can actually help to really work on the new framework and may be able to put up appropriate control on the overall operational risk structure. And then we will summarize the takeaway from this session. I'm conscious of the fact that you may have gone through some other sessions prior to my sessions, and there might be few items which will be repetitive in nature, but I thought it is important to cover at this point of time to give you the right, to set the right context and then probably talk about it. All right. So all of us know that the enterprise risk, there are core 4 pillars, which is actually controlling the entire risk framework in the BFSI sector, which is credit risk, operational risk, compliance risk, brand and reputational risk. I think in any organization, this is very normal and the standard approach, most acceptable approach of providing these 4 pillars. And the entire risk framework of the lending industry is built around these 4 pillars. Today, our focus area is operational risk. And when we talk about the operational risk, there are 4 key components which needs to be focused because the business is emerging, and our focus towards these 4 key elements are most important, which is the fraud and risk management, KYC risk, information security, and the physical security. The focus on the technology risk and the focus on the fraud risk is very, very important. I think the entire organization core backbone is residing on the operational risk management, and hence it becomes very, very important because this is directly related to your protection of financial assets. This is directly related to your reputation of your employees. This is directly related to your reputation of the customers and reputation of the brand. And hence it becomes very important to focus on the operational risk aspects, which is the backbone of the entire enterprise risk pillars in any of the lending organization, or for that matter, in any of the other organization. Let's look at what are the operational risk control approach. We all know that the operational risk management, which is ORM, the ORM cycle is which is standard and which provides a systematic approach to do the risk benefit analysis to manage complex situations, allowing decision makers to carefully think and evaluate a situation before taking an action. The ORM is simple 5 steps process, which starts with identifying the risk, assessing the risk, that what kind of a risk, what this risk is leading to. Are this leading to some financial losses? Are this leading to some reputational losses? Are this leading to something else, some regulatory compliance issue, etc.? Then take the appropriate risk measures, implement those controls, and keep on monitoring on a regular basis and see whatever impact was estimated when you're creating this operational risk framework versus what exactly the impact which is coming on. If you look at the right side, the most common end-to-end operational risk approach is defined for the BFSI. Now, there is an original role of operational risk management, which was focused on detecting and reporting normal financial irregularities, normal financial risk, such as regulatory, third-party risk, fraud management, etc., etc. Now, this mandate of bringing the second line of actually make it more effective to execute the first line of risk control execution. The evolution in ORM includes the shift from the real-time detection to provide the real-time solution and identify what are the gaps. How much is the gap in terms of what was estimated before implementing this framework and after executing this framework? And the gap needs to be minimized. The objective of this operational risk framework in any organization is to ensure that there is a continuous monitoring, there is a continuous review of the entire framework, and the gaps of the risk or the gaps of the estimated risk or potential risks are minimized. So that's the objective of this entire risk control approach. Okay. One of the key points which all of us understand that the entire operational risk frameworks are actually dependent on 4 key focal points. And those 4 key focal points are people, process, technology, and the data. In terms of operations convergence, every organization is leading towards making an integrated solutions or integrated framework, which is actually touching this entire 4 key components of the organization. The people, we need to formalize integration between IT, fraud, compliance, and information security. In terms of processes, the coordination between the entire organization and making a common company-wide framework, and then governance is very, very important. In terms of technology, everybody is moving towards the technology adoption, the new technology adoption, leveraging the advanced analytics, which is built on technology, and the tools to improve real-time insight and understand the external environment as well as the internal environment. Last but not least, the data. I think most of us are going and adopting most advanced analytics, machine learning, etc., where the entire data can be used. And I think this entire data usage becomes very, very important, considering that when you are away from the office infrastructure, when you are away from the customer, when you are away from your employee, and I think this becomes very, very important to use the data and build an advanced analytics on top of it to really understand how to integrate the entire ecosystem, lending ecosystem, which includes the external world and the internal world, and then make a most effective operational risk framework. However, being such a strong control framework in place for BFSI, the environment is constantly changing. In the last 9 months, we have seen the way the entire environment and economic situations are changing globally. COVID has undoubtedly placed financial institutions' capability to manage operational risk framework through unprecedented stress time. And I think all of us as an organization in the lending ecosystem are working toward making it more stronger and strengthening the entire ecosystem, which can help to protect people, which can help to protect processes, technology, and the data. Let's see what is changing in the environment. We all have gone through an unprecedented time in the last 9 months or so, and we again expect that this will continue for the next 4 to 6 months. The operational environment is constantly changing. The economic situations are constantly changing. The policies for the different economies is constantly changing. And I think we need to be more agile and adaptive to this new risk environment where we are able to control the entire risk, which is leading towards the reputational, financials, and the people risk and the human capital risk. Community spread is leading the uncertainty, so we don't know really how the things are going to unfold. I think this becomes more important, that we need to be always agile and keep on monitoring the situations and take the corrective measures. Priority for all the organizations, and I think all of you will agree that every organization has taken utmost precaution in maintaining the workforce healthy and safety. The workforce, the human capital is becomes very important, because you are having this workforce and the same people are actually the customers for the entire ecosystem. So we need to be very careful. Now, within this changing environment, with the different assumptions that people are working from home, people are making a choices between what kind of a risk to be taken, what are the risk benefit analysis, what are the business requirement, what are the business environment. I think it becomes important to look at the redefining of the entire operational risk framework. So let's talk about that. The new risk environment framework, I think the focal points are customer, finance, product, and the culture. So in the new risk environment, the importance is hovering around the people, the human capital, the customers. The customers' requirements are changing, which is more getting connected towards the safety needs, which is more getting connected towards the psychological needs. The customer preferences are changing day by day. The organization needs to build together the ecosystem which can fulfill their requirement in the new scheme of things, and which will evolve over a period of time. Every organization is looking for the new way of doing the finances and providing this benefit to the customers. Then what are the risk benefit analysis? What are the variables which determines the cost of doing the business versus getting the return out of it? The another key important thing is that the product, the customers are looking for redefining the entire requirement, because their needs are different. Their needs might be different in the business going forward. More and more lending organizations are directly reaching out to the consumers in the current situation, and they are expected to do more. The consumers are becoming self-aware. Their way of using the technology and data has evolved tremendously in the last 6 to 9 months, and we are expecting that more and more customers are moving towards a digital adoption, and hence this is going to make a lot of impact in the entire operational risk framework. Survival and revival of the primarily governed by the trust. So I think that culture of building that trust with the employee, that culture of building the trust with the customers, that culture of building the trust with the entire ecosystem is more and more important in the new framework of operational risk management. Let's look at how this entire ecosystem is going to work. So you have a various different risk scenarios. You have governance and compliance policies. The governments are also implementing a lot of measures. They are implementing a lot of different schemes. The business economics are changing. A lot of businesses are getting shut down. In fact, many of the business lines have been shut down. The new businesses, the new variants of the product which is coming to the market. Still in the situation, COVID-19 is really spreading. The severity, the uncertainty which is coming to the situation, I think everybody is trying to adopt to this new environment more with more agility and with more faster pace than ever. The business models are changing. As I said, direct to consumer business is getting the focus now, and there is hardly any branch model, hardly there is any channel model which is doing good. Now, in this entire risk scenario, what are the operational readiness for any organization becomes very key and important. And I think that is something which is going to govern the new risk framework. However, the approach remains same, but I think the importance and working towards the 4 focal points, which is people, process, data, and technology. This becomes very important. Now, the outcome of this entire ecosystem is going to be that what kind of a fund availability is there, what kind of a product somebody is launching, whether the customers are ready for the offtake, etc. What are the different products which we are launching, and whether those products are fitting to the market, those processes are fitting to the market. I think that is going to be the risk response strategy for the entire risk ecosystem in the lending industry. However, the wrapper is the same. You need to have the similar framework that within the new scheme of things, within the changing environment constantly, I think risk identification, assessment of risk, identifying that what kind of a losses, what kind of a risk one can see, the risk control decisions has to be there. There has to be a framework which needs to be implemented, and there is a continuous monitoring of those frameworks. I think that is becoming very, very important. So there is not really a too much of change, but I think the way it is being looked at, the way the frameworks are redefining, I think that's becoming very, very important in the new scheme of things. After going through the last 9 months of pandemic situation, and we expect that this continues for a few more months. I mean, while a lot of countries and a lot of organizations are talking about the vaccine, etc., which will actually bring more resilience to the entire ecosystem. But I think we need to be ready. And in fact, even after that, we really don't know how the things will shape up, because by the time the adoption of technology, the adoption of digitization, the data, I think the entire business model is going to get redefined, and all of us are preparing for that. And that's one of the primary reasons why we are here in this forum today. So let's move on. Let's see that what are the focus area for the new framework. I think every organization is focusing first on people first. I mean, they are the employees, they are the customers for the market. We need to focus about our people and see that they are appropriately taken care of. There is no any risk to the people, which is a human capital, which becomes the entire base of this entire ecosystem. Business has to go. I think most of the businesses has got impacted in the last 6 to 9 months, but everybody has taken some of the other changes, the approach changes, the different lines of businesses are changing, the product offerings are changing, and everybody is coming back to the business. I think we are adapting to this new normal while having so much of constraint. How do we go into the market, and how do we still do the lending business and drive this entire BFSI ecosystem, which is one of the key factor for any economic development for any country. The technology adoption is very, very important. Everybody is focusing on the new technology adoption, and most of us have adopted this technology. Most of us has gone through the digital way. This forum, the way we are conducting this entire forum, I think that is also a reflection of how the technology is getting adopted globally, how the technology is adopted within the organization, how the technology is getting adopted even within our houses when we are doing the work from home. So I think analytics driven issue direction and real-time risk reporting is also important by using of these technologies. The fourth and the last is the digital adoption. I think we have spoken about the digital adoption. More and more people are getting into the digital way, and it is actually the digital onboarding, it is digital connect, it is the digital discussion, and it is the digital seminar, the way we are doing right now. The process remains same. While these are the key focus areas, the framework is same. We need to identify the risk, assess the risk, what are the controls which we need to bring. And I think the way we need to review is that this has to be the continuous process for every organization, whether it is BFSI or any other organization, because even if you look at in the military, in the army, I think these kind of operational risk framework is constantly changing and evolving, while the most impacted place is the BFSI and the lending ecosystem. However, this becomes important for every other different units and every other different businesses as well. Moving on, what are the key principles of the framework? I think we all know this, and this is a very generic point, but some point of time when we are relaunching and redefining the entire framework, sometimes we tend to miss these key important principles of the framework. Accept no unnecessary risk. I think that's the most important thing. There is no need in the current situation when there is a crisis, when there are environment which is changing, there is no need to take unnecessary risk. Even if we have to take the risk, there has to be appropriate risk benefit analysis. We need to see whether if we are taking the risk, there is an appropriate return or not. And if these are the calculated risks, or we are actually going ahead and taking too much of risk or leveraging ourselves that there is not appropriate return. Anticipate and manage the risk planning. So I think planning becomes very important. You need to look at the different scenarios going forward. You need to look at the different scenarios currently and see what are the chances of having a risk and how can you mitigate that, and then take an appropriate decision. The risk decisioning at appropriate level. I think in today's situation, when the things are changing so much, every organization has to make it a top-down approach rather than as a bottom-up approach, or say decentralized approach. I think it has to have a centralized approach. It has to have a buy-in at the organization level, enterprise level, to ensure that there is an appropriate framework execution and which brings the most of effectiveness out of this entire framework. Now, let's see that what are the tools which is available in this changing scenario, and how the organizations or the ecosystems are adopting to this, and how it is going to benefit everybody. Contactless onboarding journey. For the BFSI situation, I think this is very, very important to have a contactless onboard journey. And most of the organization or the ecosystem is adopted, and some of them are adopting. Over a period of time, we expect that this will transform the onboarding process completely for the consumers. Key tools are adoption of digital KYC solutions. So there is a digital KYC solution which is available in the market. Many of the organizations are providing who are working in this area. Some of the large banks are creating their own digital KYC solution. There's another solution which is the digital address verification. We all know that in lending institutions or the lending ecosystem, there is a need sometimes to go and do the physical verification of customers. I think that's something which is going to get replaced completely. And we are seeing those changes very, very prominent in the market. People are going through the digital address verification rather than doing this physical verification, where there may be the people who will be involved, which is at the risk. There may be the processes which will be involved, which may be the risk. And here, doing the digital address verification through the use of technology, data is getting adopted. And that's the tool which is available in the market and which is very, very prevalent. Video personal discussion. We know that in housing finance or in SME finance or in any kind of a high ticket finance, there is a need for underwriter to speak to the customers. There are tools which is getting emerged in the market in the last 3-4 months. We have seen in the market, and people are adopting to this video personal discussion. This video personal discussion captures the interactions, make the direct to consumer interactions, gives you the flexibility to collect documents digitally, discuss with the customer digitally, capture the GPS locations, capture their office premises, entire infrastructures, and then making it seamless, contactless onboard journey for even the customers and even for the lending organizations. Fraud identification through technology and data. Now, we know that there are a lot of manual intervention if any organization is getting into the fraud identification. There are document frauds, there are different type of device frauds, there are some customers fraud, which is the transaction fraud. I think use of alternate data is preventing the identity and transaction fraud. There are information which is available because people are adopting digital way. There are digital footprints which is available. Those digital footprint vis-a-vis the declared information by the customers. I think triangulation of these information is helping to prevent identity and transaction fraud. Use of artificial intelligence, use of machine learning for reading the documents, extracting the information from the documents, and then comparing within that data and seeing if there are anomalies. This is something which is helping everybody to adopt the technology and artificial intelligence and machine learning to prevent the document fraud. There are tools which is available. There are a lot of organizations who are doing this, but there are specialized organizations like Authbridge who are working on these kind of solutions. The next piece is device insight. Because we are going more and more digital, I think it is also becoming important to figure out if there are ways that people or fraudsters are approaching the lending organization and doing the device fraud. So what does it mean? It means that a customer is applying through a different devices, a different loans by manipulating the information. How do you figure it out? that there is a device fraud. There is a same customer who is applying multiple times through the different device for getting a new loan, for getting an account opening, or for hacking somebody's account. So there is a solutions which is available in the market, which is the device insight, where you get to know about the device fraud, and that's the way you can prevent this device fraud by use of technology. And obviously there is a data, there is a timestamp which is happening. The rise of document transaction management. Now this is one of the very critical and key component of the entire operational risk framework, where we are moving towards the new way of doing this digitization of the document. We know that all the lending organizations at some point of time needs a wet signature. However, there is a way where we are moving towards digital signatures. The digital signature, the electronic signature, these are the new ways of doing, and adoption of these technologies are done in various places, and people are moving towards these ways to make sure that there is contactless onboarding happening through the digital signature and through the digitization of the document. The entire contract part is getting digitized. There is a digital documentation where on top of which there are a digital signature. I think this is taking care of the entire operational aspects of the execution of the contract, which all the BFSI sectors are doing through their end customers. The last but not the least, I think targeted analytics tool. This is very important. Uh, uh, we have seen that there's a lot of evolution which is happening in the analytical tool, and a lot of machine learning, artificial intelligence, advanced analytics, psychometric, which is also based on data. Things have been getting adopted by the BFSI sector in the last few years. However, considering the current situation and considering the way forward, the way things are changing dynamically, the advanced analytics use and the machine learning use is more and more can be seen adopted by the different organization to prevent operational risk, because this is directly related to your reputation, this is directly related to your financial assets. So this becomes very important to use this data and use the analytical tool to consume that data and inference out of it in a most appropriate way. Identifying suspicious patterns, replacing rules data driven alerts to identify the risk is very common now. Everybody is using these data to see if there are any hidden patterns, if there are any set patterns, if these patterns are leading to some kind of a potential risk. I think this is something which is going to be in use on a daily basis, and it is actually being used right now, but I think it is also evolving, and these trends are being seen that it evolves and it gives a different level of understanding in terms of how to use this and what is the learning out of it, and then embed the entire thing into the entire tool, which becomes more robust. The transforming the risk detection with data and real-time analytics, I think we've spoken about this. Fraud identification and then reporting was the previous scenarios. I think in the current scenario, all the organizations, all the lending organizations, the BFSI segment, they are doing the real-time identification of these frauds, real-time identification of these risks, and fix those risks at then and then, there only, so that there is no repetition of this. So when we spoke about the framework, I think we were talking about that continuous monitoring. That continuous monitoring is helping the risk professionals to do these changes on the fly and ensuring that the framework is robust and it is continuously moving and continuously improving day by day. So these are some of the relevant tools in the market which many of the organizations are adopting. I'm sure all of you are aware of this. However, there are some specialized people or specialized, I would say, organizations who are just working on this, and they become a very integral part of the entire lending ecosystem. So maybe that is something which needs to be explored and see how they are also investing in the future roadmap of these tools. So at the end, I would like to summarize that what is the takeaway from this entire thing, how the things are changing in the last 9 months, how the things have changed now, how the things you may see in the future. So we all know that there's a crisis. There's a COVID-19, which is a classic unknown, and it's a classic unknown. The life, livelihood, and the business survivals are undergoing through unprecedented test of time. And I think that is what leading to the unprecedented testing of the entire risk framework in all the organizations, which we need to be conscious of. The pandemic is a wake-up call. We anyway everybody was looking towards the newer and newer technology, use of the data, use of analytics. However, this wake up call has actually preponed the adoption of these technology and the data for the financial institutions. So that's something which is another takeaway. Use of data and real-time analytics, we spoke about it. I think use of data and real-time analytics is leading towards the interpretation and better forecasting, and seeing that the day by day the things are changing, going back and seeing what is the outcome, what is the planned risk, what is the actual risk, what are the gap, understanding about that environment, understanding about that risk, understanding about that data, and giving the feedback back to your entire analytical tool is very, very crucial. Most of the organizations are using it, and we must work towards a very strong framework of analytical tool, which can help and support and facilitate the more robust operational risk framework, or even for that matter, credit risk framework. Adoption of technology and digitization, we are almost used to this, and I guess that we will be further using this, and this will further enhance our access to the technology and digitization, considering that we continue through this phase. And whenever we are even passed out of this phase, I think we have used so much of technology and the digitization that everything is going to get evolved. Even the digital technology is getting evolved, and we are seeing that this will take us to the next level uh, where the resilience of this entire risk framework is going to be very, very strong. And we need to ensure that there are specialized way of technology, there is a specialized digitization way which can actually help the organization to reach to the next level and come out with this entire crisis situation. While, as I said in the beginning, banking and BFSI segment diligently working toward this and coming out of this entire economic crisis situation and working very diligently to bounce back and adopting this as a new normal. I think there is still some way to go forward, where we need to adopt more and more these technology, use of the data, focus on our people, and focus on the right fitment of the product which is required under the entire framework, new risk framework. So thank you very much for listening to me, and I hope this was useful. If there are any questions, I'm happy to take it, and there are some questions which has probably already come. We will respond back to those questions. So thank you so much.